And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and traders, and welcome to the market forecast for Thursday, March 24th, 2022. Again, I'm JD, just filling in for Hogue for a few more days. Thank you for choosing to spend your time with us. Well, I didn't spill any coffee this morning, so I'm already off to a better start than yesterday. Let's hope that little streak continues. Overnight, Asian markets closed mostly lower. European markets trading mixed right now, but mostly lower. Mixed towards the lower side. Right now, U.S. stocks are trading higher this morning also. The VIX is at 2347 at last look, and the yield on the 10-year note is currently sitting at 2.383%. On the economic calendar for today, durable goods and jobless claims just came out at 7:30. We'll touch on that in a second. We have PMI at 8:45, EIA natural gas report at 9:30. Fed balance sheet at 3:30, and we also have Neil Kashkari and Raphael Bostic speaking later this morning. So, durable goods, U.S. durable good orders, month over month, February actual came in at minus 2.2% versus 1.6% previous, estimated to be at minus 0.5%, so a little worse than estimates. Jobless claims, U.S. initial jobless claims came in at 187,000 new claims versus 214,000 previous, and an estimated 210,000. So that is also a little better. On the world news front, the U.S. has called North Korea's launch of a new intercontinental ballistic missile a brazen violation of UN Security Council resolutions that needlessly raises tensions and risks destabilizing the security situation in the region. President Biden and his national security team are assessing the situation and consulting allies, the White House said after the launch. This one comes from MarketWatch. Scandal at a Japanese brokerage widens with executives arrest. A little bit about that. The scandal at a top Japanese brokerage widened as the vice president of SMBC Nikko Securities was arrested Thursday, and the company is charged with stock manipulation. The arrest of Toshihiro Sato on charges of violating securities regulations followed arrest earlier this month of 4 other employees of the Tokyo-based company on the same charges. The company and some employees are accused of propping up stock prices by putting in massive buy orders, according to prosecutors. The Bank of England says commodity markets have seen record high margin calls, and that these remain a critical safeguard. The Russian stock market has resumed trading this morning. However, foreigners cannot sell, and traders are barred from short selling or betting that prices will fall. On the war front in Ukraine, for the next 2 days, President Biden will be meeting with NATO and EU leaders at NATO headquarters in Brussels to discuss Russia's invasion of Ukraine. Britain is freezing more Russian bank assets and adding more individuals to its sanctions list. And the Russian ambassador to Poland says that Poland has frozen the bank accounts of Russia's embassy in that country. Interesting news this morning. Let's take a look and see who's in the room. Hello, Tachyon, good morning. Bill Phillips, Spencer, Frederico, Shaw, Terry, Brian, Zach, Laura, Devon, Jake Crockett, Lewis, Expeditors. Jerry is awake. Glad you're awake, Jerry. Marcelo, Spencer, James, Brody, Rusty, Sarah Hall, good morning, everyone. I'll take a little sip of coffee here. That's right, the Russian stock exchange can only go higher. Hope everyone is off to a good start this morning. I'm feeling great. Let's, what do you say we dive into some of these charts here? Just a second, let me cue these up. And here we go. Let's start with a look at the daily in the S&P. Well, on yesterday's break, open interest in the June contract only rose by about 408 contracts, if I read that correctly. With the amount of volume traded, I would have expected that number to be a little bit higher, but it would appear that the move really didn't faze too many traders. We still see the 10 and 20-day moving averages converging on the 50-day right here, but momentum is kind of slowing down for the moment. This tells me that this market could possibly be entering into a little consolidation period, possibly setting up for some short-term pullback. Right now, prices are hovering right around the daily VWAP. Let's see what's happening on our 4-hour chart. So, the tables have turned on this 10-period moving average that I keep talking about. For the better part of the last 2 weeks, it has been a line of support for bulls to step in and do some more buying. But yesterday we finally saw a couple of these 4-hour bars close below it. Prices did find some support at this 20-period moving average overnight and stage a bit of a rally, but still only about halfway back to yesterday's high. And right now we seem to be sort of jockeying for position between these 10 and 20 period moving averages. Let's take a look at our 30-minute now. So after closing, center that. After closing right around the lows of yesterday's session, the ES moved right back into yesterday's value area. Overnight inventory is clearly long. Prices are trading back above these two short-term moving averages, and with the amount of trading that took place between yesterday's point of control and the value area high, I would expect to see some sellers try to step in up here if prices can get back up here. Overall, yesterday was the first, I would say, significantly lower close we've seen in over a week, and there is some potential for follow-through today. Overall, I'm still bullish on the ES. It's only about 6% away from all-time highs right now. And taking out yesterday's high would be the first target I would look for to confirm higher prices for today. But right now, I am looking to see some sellers step in around yesterday's point of control, around yesterday's high. But if it gets through there, we could have a nice little day in the ES. Let's take a look at crude oil. So here we are. So during Tuesday's down move, the May contract picked up about 1,300 in open interest. Then yesterday morning, we mentioned that there could be potential for a short squeeze in the works, and it looks like that's exactly what happened. During yesterday's rally, crude oil lost about 2,200 in open interest, which is telling me that some weak shorts got flushed right out of this one. We got a close above weekly kickoff high and also found some support at weekly kickoff high overnight too. We saw some buyers stepping in right there. Let's dial this down to a 4-hour really quick. So ever since this down move here on Tuesday, prices have just been dancing along this 10-period moving average. Looking at this chart, I would say that the path of least resistance right now continues to be higher for the moment. Maybe the 30-minute is showing something different though. This looks like consolidation. Overall, the broader picture still looks bullish to me. Well, let's start here. After taking out yesterday's high overnight, this one did turn around to test the bottom of the regular trading hours range. Price has been drifting sideways since and kind of hovering right inside yesterday's value area. With last night's consolidation, it looks like it. I was talking about this sort of this minor trend of making moves overnight and consolidating during regular trading hours. Last night kind of broke the mold on that, not making a significant move, trading fairly sideways, and right now inside of yesterday's value area. Overall, the broader picture still looks bullish to me, but in the short term, I would like to see this one take out the overnight high early on, or it could be a choppy day for crude oil. Let's see what's happening in the NASDAQ world. Well, yesterday's break added about 1,700 in open interest to the NQ, and volume was just a touch higher than Tuesday. You can see right here. Just like in the ES, we see the 10 and 20-day moving averages converging on the 50-day, and momentum also appears to be slowing down here also. This tells me that the market could possibly be entering into that consolidation phase that I talked about with the ES, or possibly setting up for a short-term pullback. Right now, prices are hovering right around the VWAP, just like the ES, and just trading a little bit higher. Let's see what the 4-hour says. So this one looks just a little different than the ES. Prices are still kind of dancing around this 10-period moving average here, but really haven't tested the 20-period moving average like it did in the ES. We did see a couple bars close under the 10-period recently, but we're now trading back above that area. This VWAP looks close to crossing over that 10-minute also. Ranges have kind of slowed down the last couple hours, but that's pretty typical right before the open. Let's see what is going on in the 30 world. So, again, after closing on the lows of yesterday's session, prices have moved right back into yesterday's value area. Overnight inventory is clearly long, and prices are trading back above these two short-term moving averages. Buyers took out yesterday's point of control fairly easily, it looks like, and also found a little support right there later on also. The next move I see is to test yesterday's value area high and then take out Tuesday's high if we're going to continue to move higher. Overall, yesterday was the first lower close we've really seen in this market in over a week also, and there's some potential for follow through today. Overall, I'm still bullish the NQ, just like the ES, especially since we're still fairly close to those all-time highs. But taking out Tuesday's high will be really the first line in the sand for bulls today. Yesterday's high and Tuesday's high right around the same. I wouldn't call that a double top, but just a few ticks apart. Now, on to gold. We got some action in gold this morning. First, we'll take a look at the daily. So despite that move higher yesterday, the April contract lost about 17,000 in open interest yesterday. That's a couple days in a row of significantly high losses in open interest. So it compelled me to take a look at the June contract. Volume and open interest in the June contract are starting to build. So I'm thinking the roll might be starting just a little bit early in the gold market. We'll wait and see what happens with that. Anyway, we're seeing a bit of strength today in gold. We took out last Thursday's high overnight, right back here. And we could be looking at a test of weekly kickoff high if this keeps up. I mentioned this potential bear flag yesterday, so I threw these channel lines in here for you. It's possible we see some sellers step in today right around this area where the upper channel line meets weekly kickoff high. If prices get up there today, I could personally be looking at a low risk opportunity to get short. I'll be keeping an eye on that all day long. And when I say low risk, I mean tight stops, because if this thing starts to run, we're seeing some wild swings this morning, and if this thing starts to run, it will run right over you, right? Oh. Didn't mean to close that. Meant to switch over to the 4-hour. So, here we are. Okay, you can see a little more clearly taking out last Thursday's high back here overnight. but we're still sort of in this congestion area. Just looking at the weekly kickoff zone, you can see there's been a lot of trading action between 1960 and 1910 going back to mid-February here. It also kind of looks like setting up for a possible giant head and shoulders too, doesn't it? Something I'll have to keep a closer eye on. Anyway, the upper channel line of this bear flag I mentioned a little bit ago is up around 1970 today. This market is still feeling pretty strong. We tested the weekly kickoff high, couldn't quite push through it. So like I said, if I do make a play on this, it will be very low risk, because if this thing starts to get strong again, it will likely stay strong. Let's go back down to the 30 here. So we spent the majority of the overnight session trading above yesterday's value area, but still inside of yesterday's range, with buyers stepping in right around the upper value area. That is until about 6:30 this morning, when we got a little hiccup here. I didn't see any news coming out at that time, but it sure took off. It was sure off to the races. I watched it move. It moved fast. And just as fast as it went up, it came right back down to the upper end of yesterday's range. So I'm not sure what's happening in gold right now, but it is moving. Right now we're hovering right around our yesterday's high, which is also our 3-day high. And we'll see if we can get some continued strength there. Volume on the way down, just a touch lower than volume on the way up. Can't tell if that's a fat finger or something. Maybe someone got out of control and then tried to get out right away. But this next up volume bar, just a little bit lower than the down. So this is looking like a little bit of strength right now. So we'll see. Be keeping an eye on this all day long. I'm curious to see what happens in this market later on. Let's move over to the 10-year. Here we are. So the yield on the 10-year is inching back up again this morning. Last I looked, I said right when we started the broadcast, was around 2.383%. Yesterday I mentioned that Wednesday's rally could just be some potential short covering, and that looks to be the case this morning, as the June contract lost about 18,000 in open interest during yesterday's rally. Prices are trading well below this 10-day moving average, and momentum is still pointing lower. Onto the 4-hour. Here we see prices bouncing right off this 20-period moving average and move right back down below the 10-period moving average right here. Now we're seeing a little selling pressure off the 4-hour VWAP, and also a little uptick in volume on this recent move down too, which are typical bearish signs. Onto the 30-minute. We see that prices took out yesterday's high by just a few ticks early in the overnight session, then pretty easily move right back through yesterday's value area to test the low of the regular trading hour session. These short-term moving averages are near the same level as yesterday's point of control, and we're seeing some rejection there right now. We're also hovering right around this 20 period on the VWAP, short-term moving averages. So we're getting a little bit of rejection right here. Overall, so while this daily chart does show that we're in a bit of a consolidation zone right now, I'm personally not looking to play this range at all, and I'm certainly not looking for any buying opportunities in this market. I think this still feels weak. Momentum is pointing down, and this is a buy the rip, or pardon me, sell the rip type of scenario playing out in the 10-year right now. There we go. Pretty short and sweet right there. let's take a look, see how everyone's doing. What sources do you use to monitor the news of the day? Thanks. I have my TweetDeck up all day long. I also subscribe to news outlets. I look at MarketWatch, Reuters, Wall Street Journal. I don't pay for a high-speed news data feed. The TweetDeck, I think, is the most cost-effective way for a day trader to keep up on current events, breaking news. Zachary, thanks for that update. Initial jobless claims declined to lowest since 1969. Appreciate that. Brody Morning, all from Olympic Peninsula. All right. Coffee tastes extra good this morning, especially when it's not spilled all over the floor. Right, sponsor? The mini volume profile on TS Trader. Mr. TNT, if I'm hearing you correctly, let me pull up a chart here. I'll show you how to add volume profile. So right over here on the left, let me clear this out a bit. Right over here, you see the drawing tools icon. Oh, I should probably share my screen real quick, huh? There we go. So right over here on the left, under the drawing tools option, you're going to click on that and come down to volume profile. Then you're just going to click on it. After you click on it, you're going to find the zone that you want to start the profile. So right here, I'm going to do 1:30 a.m. to 4:30 a.m. and you're going to click on both lines, and that will give you your volume profile zone. Pretty simple. And then to erase a zone, when you hover over it, you'll see the 4 arrows. Give it a double click and you can just remove it. And you can remove each one individually. Pretty simple stuff. BBTV, just for some background noise. You know, I used to have CNBC on all day long, and it drives me crazy. Just the sounds of their voices now, it sends chills down my spine. I don't think I'll ever watch that again. Nothing personal against them. I just spent years and years and years with CNBC on in the background, and yeah, I won't do it anymore. Bloomberg's also a good one to have on. Yep. I subscribe to I follow Bloomberg on Twitter, so all their breaking headlines I get on my TweetDeck feed pretty quickly. So, moving on, a few things to note. Since Hogue is out today, there will not be a Make Hogue Money session this morning. Also, it's Thursday, so there will not be a recap later this afternoon. However, Jack and Dan will be recording this week's episode of the Limit Up podcast live on YouTube at 3 o'clock Central Time today, so go ahead and tune in there. If you already subscribed to our YouTube channel, you should get a notification when it starts. If you are not subscribed, I recommend going and hitting that subscribe button, and you'll get a notification before we go live every time. Makes things just a little bit easier. And with that, if Hogue's watching, let's take our deep breath. And let's have a good trading day, everybody. I will see you tomorrow morning for Friday's forecast. Enjoy the podcast later this afternoon, and have a great trading day. Trade well, everyone. Thank you for joining me, and I'll see you later.